Many investors end up losing money after taking time to analyze the financial statements of a business before they invested. Why does this happen? Most times they take their time to analyze financial statements which report about the past. They do not care about looking at the future, whether that profit that made them to invest is sustainable. There are two ways to look at a business. You look at the business in the past. Is the business doing well? What is the revenue profile? What is the profitability profile? You are looking at the past. You have to also look at the future. Is that profit sustainable? What is the sustainability risk and opportunities that exist for that company in which you are invested? So this is why the IFRS Foundation, that's the International Financial Reporting Standards Foundation, issued two sets of standards. One issued by the IASB and the other the ISSB, that's the International Sustainability Standards Board. So the IFRS Foundation has two boards. One board is the IASB and the other board is the ISSB. Many accountants have not really taken time to ask themselves what is the difference between the ISSB and the IASB. Many investors have not even heard about them. So in this video, I'm going to explain clearly to you what the IASB is, what the ISSB is, how they differ, and the similarities that they have. So I did a video explaining the difference between the IAS and the IFRS standards. So you have the IFRS standards, International Financial Reporting Standards, and you also have the International Accounting Standards. If you have not watched that video, I encourage you to go and watch the video. Just look down, you'll be able to see the video and watch it. But for now, I want us to understand the similarities and the differences between the International Accounting Standard Board and the ISSB, that's the International Sustainability Standards Board. Now let's begin by looking at their similarities. The first one is they have the same boss. Yes, the IFRS Foundation is their boss. Whether it's the IASB or the ISSB, both of them are overseen by the IFRS Foundation. The second similarity they have is their audience. Both of them specifically are for capital markets. Okay, they build standards that are specifically for capital markets. By capital markets, I'm talking about primarily investors, lenders, and other creditors. So these are their audience. Then let's talk about materiality. Remember, I explained to you that materiality is not about size. It's not about big size or something. No, it is about the ability of that information to influence the decision of the user. So if the non-provision, the non-disclosure of some information can change the decision of a user, then we say that information is material. So they have similar materiality lens, okay, how they look at materiality, and that is from the point of view of the investor. So we call it single materiality. You know, we have single materiality and we have double materiality. Single materiality in this case is looking at only investors. So they're saying both boards focus strictly on investor-focused financial materiality. What do we mean by investor-focused financial materiality? We're saying that unless the impact could reasonably be expected to influence an investor's decision or affect the company's cash flows and enterprise value, they are looking at the impact. Can it influence the decision of the investor? They are not looking at other stakeholders like the sea, like the environment, like the planet. So when you look at that aspect also, then we'll say it is double materiality. But when you look at only how it influences or how it impacts the investor, then we say it is single materiality. So they are looking at one single lens. That's the materiality and financial materiality of the investor. Then another one is timing. IFRS S1 issued by the ISSB requires sustainability and financial report. So financial report is issued under the guide of the IASB, isn't it? Okay. Then sustainability reports are also issued under the guide of the ISSB. So it is required that both of them should be published at the exact same time to allow for seamless connectivity. Okay. So, except for a company that is first year of adoption, then there's a small window for you. There could be a temporary relief. If not, they are supposed to be issued at the same time so that there can be seamless connectivity. So you can see the similarities that the IASB and the ISSB have. Now let's go and look at how they differ. The first thing I want us to look at here is what they measure. So standards under the IASB, they measure mainly financial position, performance, and cash flows. Of course, we know that the balance sheet is one of the key documents. You also have the income statement and the statement of cash flows. So these are basically what they measure. So under the IASB, the main things measured is financial position, performance, cash flows. So these are the business operations. Now, under sustainability, what is measured is more of sustainability-related risk and opportunities, okay? And how they impact the company's financial survival and enterprise value. So you see, one is looking at the business operations, monetary operations, like position, like performance, like cash flows, whereas the other one is looking at what? Sustainability-related risk and opportunities, and how they impact enterprise value and survival. Okay, let's look at the standards that are issued by them. The IASB issued standards like the IFRS, International Financial Reporting Standard, IFRS 1, first time adoption of IFRS, IFRS 2, share-based payment, IFRS 3, business combination, IFRS 4, insurance contract, 5, non-current asset held for sale and discontinued operations. So you see all of them from IFRS 1 to 20. And in case you are not aware that there is IFRS 20, I did a video on the recently released IFRS 20. Check down my videos and watch that video. So all the standards issued by IASB are called IFRS. The ISSB has two standards, IFRS S1 and IFRS S2. These are the two standards so far. Okay. Now, what is the type of data? The type of data for IASB, their data mainly is primarily monetary in nature, okay, and it's structured, it has a structure with numbers. It's structured in numbers. We're talking of balance sheet, income statement, statement of cash flows, statement of changes in equity. Okay, it's mainly numbers. So it is monetary in nature and structured after numbers. That is the IASB. For the ISSB, it is more of qualitative than quantitative. You talk about narrations, narrations. And then where there is quantitative in the ISSB, it is not still talking monetary. It is talking more of, like metric tons of greenhouse gas emissions, carbon emissions, all those kind of stuff. Volume, quantity of this. That is what it's talking about, not money. So you can see that the data of one is talking money, money, money. That's the IASB. Whereas the data of the other one is talking more of narrations and impact, and also talking about what? Maybe metric tons of, emissions, greenhouse gas emissions, and so on. Okay, now let's look at the time horizon, the time. Now, IASB is more of backward looking, but also looks forward. It would be wrong to say it is strictly backward looking. No, it looks more at historical data, but also looks at current and future. Okay, so it reflects performance and current state, okay, but incorporates forward-looking financial estimates and assumptions. But for the ISSB, it is explicitly looking forward, and it requires companies to map out risk across short, medium, and long term. When it comes to time horizon, the ISSB is explicitly forward-looking. It's looking at sustainability-related risk and opportunities, okay, in the short run, medium, and long. So, and the standard is very clear that it wants this risk and opportunities to be looked at in the short, medium, and long-term basis. But they are all futuristic. Now let's look at when they both started, when they were established. Okay, the IASB was established in 2001 and it replaced the IASC, that's the International Accounting Standard Committee. If you recall, the IASC was responsible for issuing standards, financial standards, and we call them IAS. The IASB took over in 2001, and in that 2001, they adopted all the existing and still relevant standards issued by the IASC. So the standards of the IASB are called IFRS. I think I explained that before. And it started in 2001. Whereas for the ISSB, it was established, in fact, it was announced in 2021 at the COP26, that's COP26 Climate Summit. And it was announced to standardize global ESG reporting. That's ESG will mean environmental, social, and governance. So I want you to look at these two like this. Think of IASB as telling the story of how a company made its money in the past. And think of the ISSB as telling the story of how environmental, social, and governance risk might impact that same company's ability to make money in the future. So if you understand these two examples that I've given to you, you will never mix up the two again. So my name is Echala Okori. If you enjoyed this class, I want you to share with someone. I want you to like. I want you to give a thumbs up. And most importantly, I want you to subscribe for more like this. And there are tons of video on my channel here where you can watch for free and continue to learn. So my name is Echala Okori, Finance Simplifier. Bye for now.